Take you through the global handover that came in then, and let's start with US markets then. And stock futures were modestly higher Monday night as investors looked towards the next batch of economic data and readied for the end of June and the second quarter. Futures tied to the Dow Jones Industrial Average added 0.1%, and S&P 500 futures and Nasdaq 100 futures each also gained roughly around 0.2%. Those moves follow a losing day on Wall Street. Now, the Nasdaq composite led the way down, dropping nearly 1.2% as investors took profits on some technology stocks. Tesla slid 6%, while Nvidia, Alphabet, and Meta platforms all finished more than 3% lower. The S&P 500 closed down by about 0.5%, while the Dow was finished slightly below flat. It was the sixth consecutive negative session for the 30-stock Dow, its longest losing streak since September 2022. Despite Monday's leg down, the S&P 500 and Nasdaq are still on pace to finish June more than 3% higher, while the Dow is poised for a monthly advance of nearly 2.5%. Shifting focus to Europe then, and European markets closed slightly lower Monday as investors digested weak economic signals after a downbeat week. The Pan-European Stock 600 index provisionally closed 0.1% lower to end a choppy session, and chemicals led gains up almost 1% as oil and gas stocks climbed 0.8%. Healthcare stocks saw the biggest loss, down 1.1%. So this is what the global handover looked like, slightly negative, but let's see how that pans out for our markets today, Harsh.
Well, yes, absolutely. And quickly taking into crude, Sneh, crude was at an excellent juncture yesterday when it comes to, or a very interesting juncture, if I can call it yesterday, when it comes to the fact that had Russia, or rather the whole political development in Russia spiraled out of control, it could have probably meant that around 3.5-4 million barrels per day of crude oil would have been taken off the markets, which would have seen crude oil rise quite sharply. But it's actually doused the fire because none of that has happened in Russia. So we've seen crude actually take a bit of a retreat, if not absolutely flat. So crude is around that $69 a barrel mark where WTI is concerned. We're looking at Brent of around $74 a barrel. It was inching towards 75 yesterday. So slight bit of withdrawal that we can see on both the WTI as well as the Brent on the back of that. But on the crude front, even though there has been a diffusion of the immediate tensions in Russia, there's a further threat of volatility in crude oil prices because of course, geopolitical tensions amidst the ongoing war with Ukraine. So as we tackle all of this confusion, we had Victor Katona, who tells us what is the range of crude oil prices he is working with in the short term. Listen into this piece.
Well, I think that crude oil is still in for a little upside. Right now, we have Brent roughly around 75. I think catching 80 over the upcoming months is still possible. Triple digits are largely out of the picture. I think that as we move into September, October, the upside to oil prices, if anyone expects 90 by the end of the year, very unlikely. We have a mild recession in the US, most probably Europe headed into a recession too. And if the market has been paying attention to the Chinese data, the most recent ones being published by the Chinese authorities, are by any means not positive. We have the Dragon Boat Festival mobility levels being lower than everyone anticipated. So basically Chinese mobility is lower, home sales lower, construction activity lower, car sales is lower. So in general, a lot of the pent-up demand that people were assuming that will take place in China has not happened. So I would say 75 to 80 is the range that we are talking about, and especially in the upcoming weeks. And Q4, meaning October to December, expect a lot of weakness coming from the recession.